Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Danielle Park, editor of the popular blog Juggling Dynamite and president of Venable Park Investment Council Incorporated. Welcome back to the show, Danielle.
Hey, Jim.
The Federal Court of Appeal has ruled that proper consultation with the Aboriginals did not take place when it came to building the Kinder Morgan pipeline, so the National Energy Board has been ordered to go back and review it again. I always thought, or perhaps should have known, that something like this might have happened because the public was banned from the public hearings held on the pipeline. I thought proper consultation included the public.
Well, this is just an example of the capture that's gone on in major industry of government process over the past couple of decades in particular. And, now Canada is facing this prospect of, we've committed to buying this pipeline project, committed taxpayer dollars to bail out this company from basically their malinvestment, which, was not going to end up being profitable for them. So now we're cashing them out at a huge profit on the backs of taxpayers. And P.S. now we've realized, or the court process has dictated, that we aren't actually in a green light position to proceed with that so-called investment. So it really just shows you, I think it was a really bad decision on the part of the Trudeau government to agree to cash out Kinder Morgan from this malinvestment. And, it's a very pricey. We're going to pay the costs all over the place, not just the financial cost of agreeing to give them this money, but, even if we proceed, the cost of environmental contamination and air pollution, the waste of fresh water, all this stuff that's going into the oil and gas industry right now is costing us, and it's compounding. So our costs are going to be escalating for the future, and it just makes us have less resources to allocate to the things that we so desperately need, which are investing in innovation and ways to get off of fossil fuels.
If taxpayers are on the hook here, is it important the government gets this renewal process underway right away, or being government, will they drag their feet?
Well, who knows? I think the thing that is perhaps heartening in this, and we have seen this almost complete capture of government process in much of the free world, and certainly in North America, in spades in America right now, and they tend to be the leader of the world in the area of business policy and practice. And they certainly have a massive impact on what happens in Canada in our corporations. But we've seen this, the creep of corporations basically taking over the policy decisions of government, infiltrating politicians, infiltrating the regulations. So the only really body that we have left that has any prospect for independent analysis and sticking to the rule of law now is the branch of the government that is the judicial system. So of course, as a lawyer, I have a good deal of hope and faith that if we follow the due process, which has served in the common law system for hundreds and hundreds of years, right? And these tests and rules that require strong countervailing forces and no one party to have carte blanche without consulting the many vested interests in these issues. If we can follow that process, as we are seeing perhaps with the Court of Appeal decision, who's saying, hey, I know government and business came to a cozy conclusion here, but P.S., you've breached, constitutional principles in key areas and it can't proceed. That is a sobering blow to this corptocracy that thinks it's running the world today, and indeed is in many ways. So I think it's similar. It reminds me of the due process we've seen in underway in the United States in the past little while, for example, where Paul Manafort, is found guilty by a jury of his peers of, 8 counts of criminal, of crimes, and is facing a steep, the rest of his life in jail potentially because of these crimes. So you had there's an example of someone who's very cozy with, the politicians in office, that has this long history of corruption and tax evasion and all sorts of every kind of crime going, and has had a really brazen approach to process, in the sense of, great confidence evidently that he would get away with it, because he probably has got away with all these crimes for so many years, and he thinks, no biggie, and also because he's got some idea that the president will pardon him in the end if needs must. So you have this kind of mockery going on of basic legal principles and laws and the rule of law. And yet you get through the court system, even you had a judge in that case who was inappropriately charging the jury. I've read the transcripts. It was quite shocking, many of the things he was saying, which would tend to, have a bias against the prosecution. It's extremely impactful how a judge conducts himself in front of a jury, in a courtroom, whether he or she, shows any kind of preference for one of the sides. This is all very established, that it has a great deal of impact in biasing the outcome. So you had this going on in the courtroom, whatever the judge's motivation was, whether it was political, whether it was ideological, whatever it was completely inappropriate, and yet you still had due process run its course. So I think there, I'm putting more and more hope that judicial process, that rule writing and enforcement of rules is really our only hope to get back to some semblance of democracy here. And, that's why I was heartened again by, people like Elizabeth Warren, who, we've had just runaway insider trading and self-dealing, at all levels of government in the United States. And shocking examples of people front-running, laws that are coming in, cashing out. And really we've had this period, we've talked about it before, but it was intentional. It was a marked underfunding of the regulatory powers. And this has gone on throughout the world, whether it be in the, environmental department area, whether it be in the finance regulation area, whether it's in corporate regulation of all kinds. You've really had this a dumbing down of the enforcement principles and energy, frankly, because you've been underfunding. Governments have been cutting budgets to these regulatory arms at the same time that corporations have become obscenely wealthy and incredibly well lawyered, right? They have endless amounts of money to retain the best teams of legal experts to, undermine all of the principles that have been put in place, or to, allow them to get away with all these things. So you've got this great imbalance built into the system now, and it's heartening that, you see people like, as I say, Elizabeth Warren this month came up with a couple more acts, right? She's proposed this legislation called the Accountable Capitalism Act. Of course, she's not the only person backing it. She just happens to be a spokesperson for these things, being, I think, the fact that she is a lawyer and was a legal professor for many years, and also has this background in bankruptcy and insolvency, right? Has seen the impact of these horrendous debt levels, and how it undermines all the good that needs to happen in the free world. And so she has that perspective, and she brings it to her office. So the Accountable Capitalism Act requires corporations with $1 billion in annual revenue to accept a federal charter that says they have interests for all major stakeholders. So not just this primacy shareholder thing where it's only the shareholders' profits that matter and everything else is, we can ruin the environment, ruin the health of the population, run ruckshaw over every principle and law that we have, whether it's for, the lenders, whether it's for employees, whoever it is, none of those interests matter on this shareholder primacy standard that's been really running the show for the last sort of 30 years. So she's saying, they have to take into account the interests of all different stakeholders, and they have to have employees elect 40% of the board members. So that in itself is a shocking idea to companies which have been largely run by, cronyism, by buddies on a board who are brought on very often in close connection with the executives of the company, which they're really meant to be overseeing, but actually they're all in this kind of a cozy club together, and that's why there's been no meaningful corporate governance in many of these corporations for the past many years as well. So there's that one, and she also brought in proposed the Anti-Corruption and Public Integrity Act, which bans political insiders from owning individual company shares. And that's another critical thing that has to happen, because you see this revolving door of and this is part of her act as well, limitations on you can't leave government and go into a lobbying position, because that is a very, corrupting influence on policy decisions when you know that if you make favorable policy decisions to, for example, companies like Kinder Morgan while you're in office, when you leave them, you get rewarded with these really remarkably lucrative contracts and employment opportunities. So all these things have to really be cut back with hard lines, and the people who say that they're not necessary and you have to let laissez-faire don't understand thousands of years of human history, because we have gone in waves of this throughout time, where there's this, relaxing of all these rules and requirements, everybody going laissez-faire, it all gets totally corrupt and one-sided, undermining strength and stability, and then the pendulum begins to swing back again, and ultimately, typically, you get it too much the opposite way. But right now, we're nowhere near the middle. We're very extremely still in the favor of just the corporations.
We'll have more with Danielle Park right after the break.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead zinc silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic Engineer gold mine in the Atlan district of northwestern BC. Check us out at blindcreekresources.com.
Vatic Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vatic's management has extensive potash exploration and development experience in Thailand. Vatic will have marketing advantage compared to Western producers. Drill program commences this spring. Vatic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vaticventures.com.
Welcome back. We're speaking with Danielle Park. Danielle, speaking of corporate responsibility, BC has just launched a lawsuit against the makers of opiates. They claim that the companies knew that they were addictive, could be very harmful, and they want to be compensated for the billions spent already on treating opiate overdoses and trying to treat the people addicted to it. What's your opinion of this lawsuit?
Oh, absolutely what they should be doing. They're joining in that many of the states in the U.S. that are already have already launched lawsuits like that against the drug companies. Mr. Trump even directed the Attorney General, whoever his Attorney General it may end up being, but to launch a federal class action lawsuit as well against the opioid producers. So this is, again, when I talk about, the tipping point and the pendulum swinging, this is the kind of thing that we typically see when the public costs become so crushing that we can't possibly fund the cleanup, whether it be of, contamination in soil and water and pollution, or whether it be in, undermining the health and prosperity and productivity of the working population because they become so chronically addicted to these highly destructive drugs. The drug companies are some, along with the oil companies, drug companies, and the processed food companies are the most lucrative or successful, financially loaded companies in the world, and they have done that by, in many ways making the overall conditions much weaker and the population ill. So when you look at the carnage that's created, you say we simply don't have enough funds in the, tax-based system to go in and address the crippling weight of all this. And so we go back, I say, follow the money back to the profits. Who created the money? Who benefited? Who got the profits from creating the carnage? And we connect the two. So this is where, you've seen this kind of a pendulum swinging back, both in, like I say, in the opioid area. You're seeing, in there was a decision in the Supreme Court this month in the United States, which also said that the government can be sued for, on a class action lawsuit of young people between the ages of 11 and 22, a class action lawsuit against the government of the United States for creating a national energy system that causes climate change, and they say, therefore deprives them of constitutional rights to life, liberty, property. The damage has been caused, the profits have been extracted, and there's not enough money in the public purse to try and fund all the damage that's been caused. So this is a natural occurrence of this.
We'll have more with Danielle Park right after this.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Danielle Park. Danielle, an interesting article on your blog, Juggling Dynamite, about how the Canadian economy inflates and deflates depending on what's happening in the real estate market. Housing prices in several cities coming down, and some are worried that if interest rates go up much higher, it could cause a recession in the country. Do you share such concerns, and is this just a natural cycle, or is it something that can be controlled?
Well, it can be controlled in the sense that you can control the amount of leverage that's allowed to come into a system, but once you've allowed that amount of leverage, there's very little you can do to control how it deflates. And I think that's where we are today. There was all sorts of things we could have done in the run-up over the last decade, that would have not made it easier and easier for people to borrow more and more money. We could have increased down payment requirements. We could have made stricter lending requirements. We could have not had interest rates suppressed so long and so deeply following the 2008 downturn. But central bank policy, very much, letting the financial services sales side come back in with a vengeance and start, driving everybody into risk products and undermining their balance sheets with debt and risk. And so what's happened is we've now, got everyone sort of out on the end of that, catwalk, and there's very few places you can go now that won't be harmful to the economy, and that's the point of it. Yes, we don't have to have an economy that's so heavily dependent and leveraged on financial investment in real estate, but that's where we are. And the reason we're there is that we didn't diversify enough in our economy. We didn't build enough innovative new areas. We just went with what was the easiest. It's sort of like, it's sort of our human nature that people want to have, they think they want to have more and more things. And if they can't afford those things, then, they see other people getting them. They think, well, I'm going to get them too. And so everyone becomes really obsessed with acquiring things without the capital, which digs these big holes that we then fall into in the payback phase. So, yeah, I think, my point in putting that on was just to remind everyone that this is where we are. And it doesn't even take much higher interest rates, Jim. I actually think that there won't be a lot more hikes from the central bank side as the economy slows. As, for example, the price of copper has fallen 20% now since the start of the year because of slowing demand in places like China, because of the trade disputes which are spreading, because growth is slowing. Everyone's been focused on this first, the quarterly estimate out of the United States of 4% GDP growth, but that's a quarter. and we're still looking at an annualized pace of something like less than 3%, something 2.2 perhaps in 2019. There's a global slowdown already underway, and it's reflecting, as we've mentioned before, in emerging markets, in places like China and others where you get this exodus out of their currency and their stock market. They're already in bear markets. You see this in the strengthening U.S. dollar, strengthening flows into treasuries and government bonds and out of things like corporate assets like stocks and bonds of corporations. So this is all kind of underway already, and it's a natural recurring cycle. What we've done is magnify it to a great degree because of our, reckless behavior around debt and leverage. So we've really made it worse this time. It's interesting. You watch the stock market and the news of, higher highs and all-time peaks, and especially in the U.S. market right now. But the reality is that, the exodus of people out of stocks, whether it's pensions and hedge funds and, individuals have been moving over the last couple of decades more and more out, both because of demographics, because they need more security, because they need to have cash flow and they can't just always defer, with capital gain bets. And so you've got the main buyer of the stock market, and particularly the U.S. stock market, has been corporations buying back their own shares. In fact, in the first half of 2018, that was the only source of net buyers in the stock market. All the other groups have been net sellers, have been moving into government bonds, things where people want to have some government, principal security and a required interest payment because they need cash flow, because they're getting older. So this is where we're at. And this whole, allowing corporations to buy back their own shares and do mergers on their own shares, all at record valuations, is just another, intensification of the risk that is coming, which is when these assets mean revert, it's going to be that much more intense, this cycle. And that's another bill which is really critical, which has been brought in or proposed in this year, in the past 6 months, was Elizabeth Warren proposed a bill that would ban share buybacks. It was actually in March, which were, as we've mentioned before, they were actually considered illegal market manipulation up until 1982, and it's been in the last 30 years that all these policies that were rules that were put on the road to keep corporations from becoming just self-obsessed with leverage and self-destruction ultimately, because it's a goose's profits in the short run, but it leaves, the cupboards bare in the long run. And we see that in the number of companies that are available for even investment on public markets. You've got 40% less than you had in 2000. You've got the life expectancy of the average corporation now 15 years instead of decades, which was the old, when companies were run for balance sheet strength instead of just goosing quarterly profits. So, Canada's not alone in not preparing well for this coming downturn. Many countries have done this. They've been hollowed out and they've focused on short-term consumption, which ultimately is not that productive in terms of driving the future for innovation and development. So anyway, we've got that cross-secting with the demographic of people wanting to downsize, which I've mentioned many times. But if you look around you, you're going to run into tons of people. Most people have friends or they're there themselves. A lot of people are saying, the best thing about a big ticket item is the day you get it and the day you get rid of it. The day you sell it and take the cash out and no longer have the maintenance and the insurance and the worry of having that thing. And now you've got just some liquidity and less stuff to look after. So this is really where we are in the world because of the aging demographic. And, you've got that coming up against these record high valuations for many artificial reasons, which are not going to be able to hold in the long term. We marked the longest expansion in the stock market in history this month, Jim. congratulations, right? We're now the longest that we've had stocks going up since 2009, even longer than we saw in the 1982 expansion into the all-time record valuation peak in 2000. But the downside of that is you've suppressed the cycle, you've extended it for a few more years, but now you've just made the mean reversion that much worse. And that's been borne out by evidence of every other cycle we've ever been through, particularly the longer expansions, like in, the 60s and the one that ended in 2000. The mean reversion periods thereafter are brutal. They tend to take a couple of years and more, and they tend to take 60% off financial assets and value, and, sometimes that much off realty assets as well. So that's really lining up to be quite painful for an aging population that has become, too exposed to these bubbles.
Danielle, thank you so much for chatting with us.
Hey, thank you. I wish everyone good luck, but I wish them to keep their eyes wide open.
My guest has been Danielle Park, editor of the popular blog Juggling Dynamite. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Our YouTube channel is Talk Digital Network. You can forward questions to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.